Hey, Ron Janish here. What you see in front of you is what I see on my screen when I bring up some of the Andrews stuff. Anyway, there's one video I made using Andrews to find major profit moves, and this was made, as you can see, or posted December 7th. Now, why is this relevant today? After all, today is March 4th. Well, here's why. You really want to pay attention here. Okay, if you go back into that video, you'll find that, December 7th was up over here. And what I said at the time was that the NASDAQ had just made a high. This is the top. Those were my words. The top. Okay. Well, as you can see, maybe I was lucky, maybe not. Maybe I kind of know what I'm doing here. So anyway, what happened was prices went up and down past this green line, and they'll do that a couple of times usually. And let's look at this on a bigger scale. That's no fun. Let's see if I can change that. There we go. Okay, so here's your top, and here's your initial target, and it's probably got a good chance of coming down to here. So it's, as you can see, with 2020 hindsight, prices have come down. They've now gone up. Why is this significant? Well, because there's a real good chance that this is another important top. To put it in simple terms, to put it in a little more technical terms, it's a good chance that it's the beginning of a third wave. If you think of this as a wave 1 down and a wave 2 up, and then we go down for a third wave, and I'll show you another example of a third wave in a moment. That is what is expected here. Now, what kind of things typically happen at the beginning of a third wave? Well, people are all kinds of happy. Market's going to go up forever. You've heard that nonsense before. So, and there's one thing that I kind of subscribe to, this crash canary nonsense. And the crash canary is absolutely wonderful at being wrong. The crash canary, when it was down here, was dead. Well, okay. And as soon as it got up here yesterday, crash canary said it's back alive, sick, or something like that. Anyway, my estimation is, using my technical indicators, which I've done lots of studies, lots of tests with, that's the good old Andrews technique, Andrews and Babson. You can find it over at andrewscourse.com. My technology suggests that we are now at a place where we are starting a third wave down. Okay, let's see another example of a third wave down. Let's see, where's a nice third wave? Here we go. Here we go. What kind of stuff? Well, that's really not the prettiest one, but last time we were at December 2nd. We're over here. So here's your 0. Here's your 1, 2. So here's an example of a third wave down. Remember this a few weeks ago? Everybody's going, oh no, how terrible. Well, this is the kind of stuff that happens in a third wave down, folks. And so recently I posted this chart here, and this is kind of a little experiment we were doing. And we simply looked at the chart, and with perfect 2020 hindsight, when we got to somewhere around here, as we looked for certain things that had occurred at these different turning points. And if you notice, it doesn't pick off every turning point, but there's more than enough that are interesting. And it's simply, and the conclusion I draw that would be interesting is to exit on an IO, COR signal or G5 signal, and enter when you have 2 or more signals. So in other words, The entry might be over here because here you have 3, here you have 3, and and here you have 1, and so here you have 1, and so exit and long here and exit and long here, da, 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 da. And we did that all with perfect 2020 hindsight. Glad to admit it. I've got more than enough tests online which show that you really don't need 2020 hindsight to do this stuff if you have good technology to work with. Anyway, what we have here is very interesting in my opinion. Right in here we have one of these wonderful little patterns. Just for grins, I'm going to see if that green line thing applies here. Whoops, that's the wrong way. Oh, here's your green line thing. Okay, it's kind of steep for the green line. Anyway, so what we have is we have a certain pattern in here that Andrews noted, and then we have something that we use that is very unique, and that's called a sandbar. We have a sandbar 3 signal at this point. In order for it to be confirmed, we have to get a lower, prices have to close significantly lower than where they are right now, which I doubt will happen. So they're going to have to close below today's low on Monday at a certain value. Okay, and then we also have something else in here that suggests to us this is a good reversal area. So we'll see. In order to have this kind of thing verified, from my point of view, is we would have to have a lower close than today's low, and maybe even just a tad lower than that. I'll have to do the exact measurements. So watch out for that for Monday. Monday is let's see, today's the 4th, 5th, 6th, 7th, is the 7th of March. So see what happens, because if we get a good down move here, we are talking about a very significant move that will take the market much further down. Okay? Anyway, you have a good weekend. If you want to learn how to do this stuff, not a problem. Go to andrewscourse.com, all one word. Been doing this for years and years and years, and I have software that I've tested it out. As a matter of fact, you can recently shakeout test. I posted that, and you can see how I actually tested different things, different ways of doing the same thing. And as a result of that test, it gave me some insight as to which way works the best. So if you see this video here, you can see that and all that good stuff. Anyway, you have yourselves a good weekend, and I'll see you next time.